Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Anhui Expressway Company Limited annual report. Anhui Expressway Company Limited is a leading provider of expressway-related services in China. At its core, the company engages in the construction, operation, management, and development of toll roads and associated service sections across the country. The company owns interests in numerous expressways, including Henning Expressway, New Tianjin section of National Trunk 205, Geaji Expressway, Xunguang Expressway, Ninghua Expressway Tianjin section, Lianhu Highway Anhui section, Guangxi Expressway, Ningxuanheng Expressway, Anqing Yangtze River Expressway Bridge, and Yuyu Expressway Anhui section. This extensive network of expressways enables the company to provide a range of services to its customers. In addition to its core business, Anhui Expressway Company Limited also offers pawn loan services. This diversification into financial services allows the company to tap into new revenue streams and expand its customer base. With its strong presence in China's expressway sector and growing financial services arm, Anhui Expressway Company Limited is well-positioned for continued growth and success. The company's extensive portfolio of expressways includes Henning Expressway New Tianjin section of National Trunk 205 Geaji Expressway, Xunguang Expressway Ninghua Expressway Tianjin section, Lianhu Highway Anhui section, Guangxi Expressway Ningxuanheng Expressway Anqing Yangtze River Expressway Bridge Yuyu Expressway Anhui section. The company's pawn loan services provide an additional revenue stream and allow it to expand its customer base. Anhui Expressway Company Limited market capitalization of 32 billion is significantly larger than the average industry peer of roughly 3 billion. This shows that Anhui Expressway Company Limited holds a significant advantage in their industry. Anhui Expressway Company Limited trades at a higher price-to-earnings ratio of 12 times and a higher price-to-book ratio of 1.74 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 4.6%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the given context are primarily related to toll income, service income, and the adoption of digital and intelligent technologies. Revenue growth is driven by several factors. Firstly, an increase in toll income from various expressways such as Xunguang Expressway, Anqing Yangtze River Highway Bridge, and Fuzhou Expressway has contributed significantly to revenue growth. Additionally, service income from management of toll roads, including Guangxi Expressway and road emergency assistance services, has also seen a notable increase. Furthermore, the empowerment by digital and intelligent technologies and deepened reform of state-owned enterprises have also played a crucial role in driving revenue growth. On the other hand, revenue decline is attributed to several factors as well. A decrease in toll income from various expressways such as Henning Expressway, new line of Tianjin section of National Highway 205, and Guangxi Expressway has led to a decline in revenue. Rental income from various expressways has also seen a significant drop, with others experiencing an 87.5% decrease. Moreover, the backflow of vehicles to Xunguang and Guangxi expressways and diversion impact from differential toll policy adjustment on Ningliwo Expressway have further contributed to the decline in revenue. The company's financial performance indicates a significant milestone. It has achieved positive operating cash flow. This means that the company is generating more cash from its core business operations than it is spending on operational expenses and investments. As stated, this is a crucial indicator of a company's financial health, as it suggests that the business is capable of sustaining itself without relying heavily on external funding sources. The company's financial health has undergone significant changes in terms of debt level and interest expenses. The total debt level has seen a notable increase of 10.6% from RMB 27,538,089 to RMB 30,443,842. This upward trend is also reflected in the total liabilities, which have risen by a substantial 69.3%. Furthermore, interest expenses have also witnessed a considerable hike, with borrowings-related interest expenses increasing by 11.2% and total finance costs rising by a staggering 71.1%. These changes indicate that the company's financial obligations are becoming more burdensome, warranting closer examination of its debt management strategies. Management is maintaining a consistent strategy despite changes in accounting policies. They are optimistic about expanding their core business through external investments and seizing major strategic opportunities in the expressway industry. The company's focus remains on highway construction, management, and operation, with a particular emphasis on Fuzhou Highway Enterprises and Sixu Expressway. This indicates a commitment to strengthening its existing operations and leveraging its expertise in these areas. In addition to expanding its core business, management is also looking to unlock new opportunities through the development of smart transportation. This initiative has the potential to drive growth and innovation within the expressway industry as a whole. Furthermore, state-owned enterprises will continue to play a key role in driving reform and innovation initiatives. By deepening these efforts, the company aims to stay ahead of the curve and capitalize on emerging trends and opportunities. The company has a history of paying dividends to its shareholders. In the past 2 years, it has distributed significant amounts to its investors. In 2025, the company paid out RMB billion, 31,990,000 in dividends, while in 2024, it paid RMB 996,825,000. This demonstrates the company's commitment to rewarding its shareholders through dividend payments. On the other hand, there is no evidence of share buybacks by the company. Unlike some of its peers, this company has not utilized share repurchases as a means of returning value to its investors. That concludes the financial summary for Anhui Expressway Company Limited. Feel free to comment below, and I will be happy to answer them when possible.